Both gold and silver charts exhibit possible bearish momentum, with gold showing an emerging bearish divergence on the daily timeframe poised for a breakdown, while silver has already retraced, reinforced by sharp intraday declines and negative momentum readings on both timeframes. The daily chart of gold illustrates a potential bearish divergence setup involving the price action and the commodity channel index indicator, signaling weakening momentum despite an ongoing uptrend. On the price chart, gold has been in a bullish trajectory since around September 2025, forming higher highs with the most recent peak near 4,500 in late December 2025, followed by a minor pullback. This is evident from the ascending candlestick pattern, supported by multiple exponential weighted moving averages, which act as dynamic support levels, and a red bearish candle highlighting recent resistance. The bearish divergence is emerging as follows. While the price has achieved higher highs from approximately 3,900 in late October to 4,500 in December, the CCI indicator in the lower panel shows corresponding lower highs. The CCI peaked above plus 300 during the initial price surge in October, but failed to exceed that level on the subsequent price high, instead forming a lower peak around plus 150, with a red trend line connecting these diminishing tops. This classic divergence suggests fading buying pressure and potential exhaustion in the uptrend, often a precursor to a reversal or deeper correction. Emphasis should be placed on the key support level around 4,101, which aligns with the horizontal blue line and recent swing lows. A break below this level, potentially triggered by the divergence, could accelerate bearish momentum, invalidating the short-term uptrend and targeting lower supports near 3,886 or the rising blue channel line. Current price hovers around 4,332, with a red downward arrow indicating a critical inflection point where sellers could gain control if support fails. The 1-hour chart provides a shorter-term view of gold's price action, confirming intraday weakness and aligning with the daily divergence theme. Price rallied sharply from around 4,300 in mid-December 2025 to a high near 4,550, but has since entered a steep decline. This drop is accompanied by bearish candlestick formations, including a series of lower highs and lows, with the price now testing levels around 4,332 to 4,340. The daily chart of silver depicts a bearish move that has gained traction following an extended uptrend from October 2025, where prices climbed from around 50 to a peak near 85 in late December 2025. This downside pressure is highlighted by a recent breakdown, with the price failing to hold and hitting resistance and now testing lower levels around 72. The candlestick pattern shows increased selling, confirming the bearish shift as prices pull back from the high, potentially signaling the end of the bullish channel. Corresponding moves on the CCI indicator in the lower panel reinforce this bearish narrative. The CCI, plotted in black, formed a series of lower highs under a red descending trendline, diverging from the price's higher highs earlier in the uptrend. This divergence indicated weakening momentum, and the CCI has since crossed down towards plus 200, aligning with the price breakdown and suggesting sustained selling pressure. Emphasis must be placed on the key support level near 70, which if breached is under immediate threat. If confirmed broken, this could accelerate the bearish move toward deeper supports around 50, invalidating the multi-month uptrend and opening the door for further declines amid overbought conditions unwinding. The 1-hour chart offers a granular view of silver's intraday dynamics, capturing a sharp bearish reversal after a brief rally to highs near 8.410 in late December 2025. The price has since plummeted, forming a series of lower highs and lows with bearish candlesticks dominating. Overlaid indicators, including the SMA 200 and multiple moving averages, show a clear death cross where shorter MAs have rolled over below longer ones, confirming seller dominance as price slides to current levels around 72. In the lower panel, the CCI echoes this downturn, displaying a pronounced bearish divergence. Earlier higher price highs corresponded with lower CCI peaks, connected by a red trendline, peaking around plus 350 before crashing through zero into oversold readings near minus 29. Shaded pink and green areas highlight momentum flips, with persistent red shading indicating ongoing weakness. This setup points to continued short-term downside risk, potentially probing supports at 7.000 or lower if the daily breakdown persists, though oversold conditions could prompt minor rebounds. Overall, it aligns with the broader bearish theme from the daily chart. To access some share trading ideas, consider subscribing to the Patreon page, where each weekend a bullish share scan is run on blue-chip shares across various regions of the world stock markets. These were the trades made during December, showing a return of 4.54%. Again, consider subscribing to the Patreon page to access the scans each week. Links are in the description below. Lastly, let me know in the comments if you prefer me narrating the daily videos, or do you prefer Pete's voice? He says he won't be offended if you choose me. I'm not sure about that. Hit that like and subscribe and share button to help support the channel. Thanks again, and see you in our next video update.